The Jamaica Stock Exchange lost $5 billion in one day on Monday. It's almost as bad as when COVID just hit. So what the heck is going on? I'm Kalilah Reynolds, financial journalist and educator based in Jamaica. Let me explain. So why is everyone apparently running from the stock market right now? I'll tell you why, and it might not have anything to do with the value or even the performance of companies listed on the stock exchange. And performance, I don't mean stock market performance, I mean company performance. This is an it's not you, it's me kind of breakup. The JSE did nothing wrong, investors just found something better. And one of those somethings is probably government paper. Now, the government of Jamaica recently issued $35 billion in bonds at interest rates as high as 12.25%, and they're expected to issue some more very soon. Now, bonds are when the government borrows money from you. Remember, I told you recently that part of the way the government plans to pay for its $1 trillion budget is by borrowing. Well, the government doesn't only borrow from banks, it also issues bonds that you can buy. So you can actually lend your own money to the government and they'll pay you interest. Shauna K. Kelly-Reid, who's a trader at JMMB, told us about the government's new offer last night on Taking Stock.
Because there's a lot of liquidity in the market as a result of the FR 2023 bond maturing in mid-March. So they wanted to pay.
Bond? What bond is that?
That is the GOJ FR 2023. Okay. Right. So that matured and that put a lot of liquidity in the market. Now the BOJ was
Let's just break it down before you continue. So when you said the bond matured, so a GOJ bond matured in February and that put a lot of liquidity in March. That put liquidity in the market. That just means when that bond matured, a lot of people get some money, right?
Right.
So there's lots of cash in the economy.
Lots of cash. So whether it's banks, whether it's businesses, whether it's individual, everybody that invested in these bonds, they got their return.
So how much money are we talking about that the GOJ bond just paid out, do you know?
The GOJ bond paid out $43 billion.
Wow.
They would have. Yes, but they came to market with about 35 billion worth of bonds. And what we saw happening is that, the market decided that we're not interested in these bonds at this time. We want to keep our liquidity. We want to see what is happening in the local and international market. We want to hold on to our cash. Cash is king in time of uncertainty. And this is what the market is saying right now.
See, guys, this is why I keep telling you to watch Taking Stock. This is the show that the real money people watch to spot the opportunities. So check out that full episode over on my YouTube channel. Now, notice that Shauna K. did say that there wasn't much interest in the government's new bonds, so that's probably not the full story. As a matter of fact, let me give you a quick history lesson here about government bonds, government paper. There was a time when a lot of Jamaicans got very rich by lending their money to the government. And this was because the government was offering exorbitantly high interest rates, all 30 and 40%. And why so high? Well, because nobody trusted the government to pay them back. So if they were going to take that risk, there better be a very high reward. And this is partly how Jamaica ended up so badly in debt up to the early 2000s. And most people think that Jamaica's debt problem is because we're owed the IMF and the World Bank and a bunch of international people. But actually, most of Jamaica's debt was owed to Jamaicans who bought government bonds. So when the government eventually defaulted on these bonds because they couldn't pay them back, it was unsustainable, it's a lot of regular people who invested in them who got burned. But then again, they knew the risk. So if you're considering investing in government bonds, you have to ask yourself, do you trust the government to pay you back when they say they're gonna pay you back? Is 10 or 12% enough of a reward to take on that risk? Now, bear in mind, the government just paid back $43 billion in full and on time in March, and they've been doing so for the past few years. and 10% isn't as unsustainable as 30. Anyway, back to what's going on now. Usually when there's a large sell-off in the stock market, it's either out of fear and panic such as COVID, or it means people are pulling out their money to prepare for some other opportunity that's coming up. But put in context, a $5 billion fall in the stock market at the same time as the government is issuing billions of dollars in new bonds in an environment where people are seeking more conservative investments is probably something to be expected. Additionally, other major players have also been issuing bonds recently. NCB just did a bond that's paying almost 12% interest. Bonds are generally considered safer than stocks, and with interest rates going higher and higher, it's giving people more of an incentive to move from stocks into bonds. And this is why we pay keen attention when the Bank of Jamaica issues its report every month. And the analysts on Taking Stock have been telling you for months now that with those interest rates going up, you should consider moving at least some of your investments into bonds. Because remember, when interest rates go up, it has two different impacts depending on where you are financially. For most people who are consumers, it makes borrowing more expensive. So your car payments are going up. Your mortgage payments are going up. Any other loan you have, those interest rates are going up. But if you're an investor, you can actually take advantage of higher interest rates because you can now lend your money to the bank or the government or to whoever is issuing a bond and earn a higher return. So I hope this helped to explain what's going on in the market right now. Comment newsletter below if you want me to send you info like this, and I'll DM you the link to sign up. Let's get this money.